Hey guys, Joel Frank here, market analyst for YouTrading, and in today's video we'll be taking a quick look at a trade idea that I'm monitoring at the moment. It is to do with dollar yen, which you can see here on the chart is making some big moves. It's 4.2% lower on the day at the moment, which is very unusual. The last time we had a big move was the 10th of November, which was when we had this massive downside inflation surprise in the US that triggered a lot of hopes that Fed hawkishness had now peaked. And also combine that with some technical selling. Well, it appears to be a similar story, although a different fundamental catalyst, and we'll get into that in a moment. But it appears to be a similar story this Tuesday. Technical selling certainly in play. You can see here, I can draw up these downtrend lines. We sort of were in a bit of a pennant, you could argue. 200-day moving average as well there, which is around 135.70, was also acting in support, and we've smashed through all of that, and lowest levels since August, and looking very much like we want to test this early August low at what is that level? 130, yeah, basically 130.50. Still not quite in oversold territory according to the RSI, which suggests that we might have the legs to do it. Although a big push to the downside of this support level in the near term, I think probably isn't likely, just because, if we do see that, well, we are going to get very oversold. So yeah, maybe we can test this level, just nick below it to hit our lowest level since June. But I'm not expecting the massive break below it just yet. I'll be looking for consolidation. Um, Before we talk about the trade idea, how that plays into what's going on here, just quickly, what triggered this move? Well, a surprise hawkish move from the Bank of Japan. They unexpectedly tweaked their yield curve control policy. Now, their old yield curve control policy, which had been in play for a very long time, had pretty much meant that the Japanese 10-year yield wasn't allowed to deviate from zero by more than 25 basis points. That policy had been in place for years. That had basically meant that the Japanese yield curve, most of it had been pretty much dead for years. Of course, Japan taken these highly accommodative policies in order to try and stimulate inflation because they've been fighting deflation since the 90s. Um, that's not the case anymore, though. We've had this global rise in inflation, which, although less acute in Japan, you have still seen inflation in Japan move substantially above the central bank there's targets. So they seem to be looking at this rise in inflation as an opportunity to back away from their ultra accommodative stance, and they've done that by widening uh, the band pretty much in their yield curve control policy. The 10-year yield is now allowed to go as high as 0.5%. Now, we've seen a big move higher in long-term Japanese yields, so it's almost as if markets have taken this policy shift like it's a rate hike. Now, it's not a rate hike. The benchmark interest rate is still minus 0.1%. But the change in the yield curve control, a 25 basis point lift to how high the 10-year yield is allowed to go, has pretty much been interpreted as that, which is why we're seeing this big move higher in the yen, hawkish surprise. But like I said, things could get overstretched, and I'm thinking the idea that I would have here is wait for some consolidation, wait for a rally actually, perhaps back towards this 200-day moving average, towards some of these resistance trend lines. 135 area really, or upper 134s is where you'd be wanting to get involved again with short positions. First target being a retest of this August low, and then the second target, or I'd only be having two targets, would be a test of this May low here around 126.50. So yeah, that's one of the trades I'm looking at the moment. I think it could certainly play out. The Fed's trying to keep a hawkish line going in terms of their rhetoric, but as we've been seeing in the US data, US inflation has clearly peaked, the US economy is clearly worsening, and inflation is clearly on its way. Not clearly on its way, but very much seems to be on the way for 2023. How long can the Fed sort of ignore reality and continue to talk about how hawkish it's going to be? Maybe not that long. Maybe that dovish Fed pivot is going to come eventually. And, if we're getting a more hawkish Bank of Japan as well, then this is a double whammy for dollar yen, and eventually we could be headed all the way back to erasing 2022's gains, which would be a fallback to the 1 15 area. But we're gonna have to wait and see. Gonna have to wait and see, as is always the case. So yeah, guys, hope you enjoyed the video. Hope you all found it informative, and I will see you all in the next one.